Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for May 23rd. This morning I'm going to run through the main indicators for the week ahead, the preliminary PMIs, a Bank of Canada meeting, and the G7 summit are the highlights of this week. Now, the week begins today with the preliminary market May PMIs from Japan, which we already had, France, Germany, the EU, and the US. All that we have forecast for are expected to be higher. My guess is that a rise in the US PMIs would outweigh a rise in the European PMIs because the ECB isn't likely to take them into consideration in its decision making, while the Fed is watching the day-to-day flow of the data very closely. So anything that will reassure FOMC members that the US economy is on the right track should be positive for the dollar. There's a large number of other surveys coming out for the Eurozone this week, including the ZEW and IFO surveys, plus the GfK consumer confidence for Germany, French and Italian manufacturing surveys, and French consumer confidence. Now, Wednesday's Bank of Canada meeting is unlikely to make any changes in its overnight lending rate, which has been at 0.5% since July of last year. In fact, no change in rates either way is priced in for the remainder of this year. The statement is likely to include an assessment of the impact of the wildfires in the oil-producing region of Alberta, which may give it a more dovish tone that would be negative for the Canadian dollar. The G7 meeting is proving contentious. Several central banks, particularly the ECB, have stressed that monetary policy can't carry the entire burden of supporting the global economy. But so far, there's no consensus on coordinated fiscal action. In its absence, I'd expect some fairly innocuous statement about how everyone should strive to boost growth in line with their domestic conditions. Translated, that means they'll keep doing what they are already doing. Growth is good and intervention isn't nice is probably the most we can expect if the full meeting is anything like the weekend's meeting of finance ministers and central bank governors. The main U.S. indicator out this week is durable goods on Thursday. Orders have basically trended sideways for the last year, and this month is expected to continue the pattern with little implication for the dollar. There are also more U.S. housing statistics coming out during the week, which could be positive for the dollar. As usual, there'll be an array of Fed and ECB speakers making waves during the week. Of particular interest will be Friday's talk by Fed Chair Yellen, although it's not clear to me that what's being billed as, quote, a conversation around her groundbreaking achievements, unquote, together with personal reflections by former Chair Bernanke, will give us very many insights into monetary policy. Now, the Japanese CPI data is expected to show Japan lurching further into deflation. That could be negative for the yen. It may boost hope for further action by the Bank of Japan, which could boost stock prices, which then causes dollar-yen to rally, or in other words, the yen to weaken. That's about what we saw last week with the better-than-expected GDP figures. Good news is bad news in a financial world dominated by central banks. Australia announces its private capital expenditure figure for the first quarter. The expected decline could be negative for the Australian dollar. Finally, Germany, UK, and the US released the second estimates of their first quarter GDP figures. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.